Back in college, I was pretty broke. And by broke, I don't mean that I was eating ramen soup every day. I mean that I didn't have large sums of money to be investing in blue chip dividend stocks. In that case, I came across loan Manhattan Bridge Capital, which was a cheaper option. And to this day, it's been steady dividend payouts, and they have not cut their dividend payment. But the way that this company makes money is kind of wild. So stick around. I'll break down the true story behind the Manhattan Bridge Capital and whether it's still worth holding. Now, quick disclaimer, this is not any financial advice. I'm not telling you guys to buy the stock, sell it, or do anything with it. I'm just sharing information about what the company actually does, how it makes money, and why I personally still hold a small position. So that being said, do your own research and we'll get right to it. So the Manhattan Bridge Capital is a small REIT company in New York City. It operates in the New York City metro area, but it also has some operations around the suburbs. So essentially what this company does is they lend out money to real estate owners, and basically the money that they lend out is a high interest rate. So they usually target those who are looking to do a quick flip on a property or investors that have a poor credit, and basically they charge a high interest rate on the money that they loan out, and in return they also use the property as collateral. So if any borrower of Manhattan Bridge Capital defaults on their debt, essentially they take over the property, seizing the property. So essentially they siege the property and sell it themselves. And the money that they make in profit, they distribute 90% of that money to their investors in the form of a dividend payment, and that is a way that they avoid paying high taxes, corporate taxes, in essence leaving that to the investors. Now, my opinion on the stock is there's not much growth in the stock. It IPO'd back in 1999. It went through a different name in 2008. So it used to be called DAG Media, and in 2008 it changed to Loan. Since its name change, it seemed like the stock has been growing. It fluctuates, but consistently it looks like it's been on the rise, but I don't see much long-term investing in this stock. I don't see the stock reaching any enormous heights. It's been paying dividends. It's since 2014, and they haven't had a dividend cut, which is good for investors. And with a high interest yield at about 10%, I believe, it's quite impressive that they have not cut any of their dividends. Now, usually a lot of professional investors don't even look at this stock with that high of an interest yield. Usually they go for under 2%. I put my risk at 5%, but for a stock that has a dividend yield of 10% and for it not to cut any of their dividend payments, and on top of that, the stock price growing, it has not fallen under its IPO, that's quite impressive. So I continue to hold Loan because it pays consistent dividends and it's not dropping substantially like you see in other stocks with high dividend yields. So for me, I see it as a stable, steady stock. Nothing too flashy, nothing that will take me to the moon, but a nice passive income, for a lack of a better term. That being said, if you're looking for a stock that makes you passive income and is pretty steady with a solid history of no dividend cuts, I'd say Manhattan Bridge Capital is worth looking at and possibly worth the investment, but you guys should know what you are buying with this stock. And with that, please drop your feedback or comments down below and let me know what you think about Manhattan Bridge Capital. Are you investing in it? Are you looking into investing in it? Let me know in the comments. Be sure to give me a subscribe, and I'll see you guys in the next video. Thank you guys.